All right, we're back. We have Art Carter with CRMLS, the California Regional Multiple Listing Service. He is the CEO. Welcome.
Thank you for having me.
We've been doing a little conversation before we turn the cameras on. So how long have you been with CRMLS now?
16 years.
16. And 25 in the industry, or?
About 23, 24 in the
Long
industry.
time. We're getting old. Look at the gray.
I knew you back before the gray.
We knew each other when, right?
Exactly.
Yeah, we both did. So at any rate, first of all, thank you for coming back. You've done a couple of these for me, and I'm always appreciative. Our audience, just to kind of recast, maybe for you, is probably 30 to 40% realtors, 30 to 40% affiliate types, some landlord tenants, and then consumers. We have a lot of consumers that are watching us. And I mentioned to you earlier, we had over almost 450,000 views of our videos last year, and that was all over the place. So for those of you that may not be familiar with Art and CRMLS, you're kind of a big deal.
Nah.
No, seriously.
I enjoy what I do. It's a challenge, and
Right.
I love the industry. So.
Yep. Well, talking about knowing you when and knowing me when, let's face it, the multiple listing service has gone quite a distance in the last 20 years, and certainly in the last 15, 16 years under your leadership with CRMLS. So, a bunch of things we want to talk about.
Yeah.
Why don't we start with some of this litigation stuff that's going on? If there's areas you can't get into, then so be it. We'll leave that aside. But
there's going to be some that probably won't talk about in depth. But there's a lot of litigation going on in the industry. It's crazy. There's seller side lawsuits going on. There's buyer side lawsuits going on. All of it's really centered around the commission and who's really paying it and who gets to negotiate it and
all the stuff that we as an industry, we've just kind of, this is how it's been.
Yeah, it's just, this is the way that things have always been done, and I don't think people really question it, but now the courts are being asked to question it and being asked to provide some decisions. They're all antitrust lawsuits claiming violations of antitrust law.
Right.
And so those cases, they're not cut and dried and quick cases. There are some antitrust cases out there that have been going on for 10 years. So hopefully all of these different ones don't go on that long, but it's looking like they potentially could.
Yeah, it's funny. By the time these things get resolved, who knows what our industry is going to look like anyway? Whether it's compensation or whether we're even in business anymore.
We'll be retired at that point.
Well, something tells me you might be in business, but I don't know. I mean, we are definitely in some interesting times. Matter of fact, I don't know if Mark Dowling's interviews whether we're going to bring him on before you or after you, so we might be a little bit out of order. But Mark had suggested, hey, you might want to talk to Art about some of this litigation stuff that's going on. But it's certainly interesting times. So
that's for sure.
Well, let's leave that aside. Obviously, we don't want to talk compensation. That's not the appropriate place to do it. But just knowing that there's some challenges going on in the marketplace, and I know NAR and we're a Coldwell Banker, Realogy brand, and Realogy got brought in, or one of the brands, maybe even Coldwell Banker got brought into one of those suits.
At this point, Realogy has been brought into a number of the different lawsuits.
Why not? Right?
Well, I think they're just looking for deep pockets.
Of course. Let's just bring the hammer out. So, okay, we touch base before we turn the cameras on about inventory.
Yeah.
So, again, you got to remember who Art is. By the way, let's define CRMLS a little bit, because I may not even know where the most latest expansion has been. So, what part of the world or California are you now in charge of?
So we provide services to about 105,000 real estate professionals up and down the state of California.
Okay.
And that's brokers, agents, appraisers, even mortgage professionals sometimes pop in, and as long as they have real estate licenses, will gain services from CRMLS.
Right.
So we go all the way from Red Bluff in Northern California down to the San Diego border.
Okay. So 105,000. So I haven't been on the CAR board for a while, but what do we have? 240,000 realtor members now, something like that?
Well, there's probably about 220,000, 210,000 MLS subscribers in the state.
Okay, so what, 40% of those maybe, sounds like, right?
Yeah. Well,
it's a big number.
Well, it's close to 50% at this
50.
point, so.
You're a big deal.
Well, we pride ourselves in providing as much access as we possibly can.
Right.
We do data shares with those that don't want to be a part of the CRMLS system.
Right.
And I think we provide about 70% of the listing content in the state of California to our professionals on a daily basis.
So you got 50% of the state. I don't even want to talk about a national MLS. We don't have time for that, and I don't know that anybody's interested in it. I don't even know if that's happening or even being talked about anymore, so let's screw that. But you mentioned data share. I got to ask about Zillow. I don't even know if you can say anything about Zillow. Obviously, things have changed. We in the industry are keeping an eye on what's going on. They're now, I guess, brokerage in the truest sense of the word. Yeah. I think CRMLS and the association started putting out some notices 2, 3, 4 weeks ago. It said, hey, just so you know, it's changing. From your perspective, what does that mean? Anything? Or they're just a member?
At this point, they're just a member. It's interesting in that, Zillow traded a contractual relationship with CRMLS for a broker relationship with CRMLS. And I know there's a lot of angst and a lot of people upset and asking how could this have occurred.
Right.
Zillow's got a very active iBuyer program, especially in Southern California. They're putting hundreds of listings a month into the CRMLS system.
Yep.
And
as owners of those properties.
As owners of those properties.
And listing brokers.
Exactly.
Right.
Exactly. Well, for a long period of time, they were utilizing a separate broker to do that business for them. And it probably just made sense, given the volume that they're dealing with, to bring that in-house.
Right. And I want to say OfferPad, not OfferPad. Who am I thinking of?
Opendoor.
Opendoor is doing the same thing, basically?
No, they are. Well, yeah, they're doing basically the same thing and have joined CRMLS as well.
Well, without the Zillow engine behind them. Got it.
Exactly.
Yeah, it's interesting. I think we talked about them and the iBuyer thing the last time we were on stage, which is hard to believe that was 2 years ago. And the iBuyer seemed to kind of, oh, wait a minute, we got a pandemic going on. Maybe we might want to pull back from that. But that pullback seems to now be re-engaged as far as, I guess, Zillow's buying and Opendoor's buying, and they're doing their thing. I'd be curious, and we did very little prep for this, so if I throw you a curveball, just say, Lance, I don't know, and we'll just move on. I was on a call a week ago with Alex Perillo. The name sounds familiar.
Yeah, absolutely.
I don't even remember what Alex's titles were, but I think he held every upper level title at Realogy and Coldwell Banker. And it was interesting. And I think he's still a Realogy guy, but I think he's more in an advisory capacity now. But he was on a call, and we're kind of having this conversation, and he brought up, and it wasn't just casual. At least I don't think it was casual. So Alex, if it was less than casual, let me know, or more than casual. But it was the real possibility of a consumer one-click purchasing a property. So, which I think is kind of, and again, I don't think he meant to say it's clicked and it's done, you've bought the property, but I'm interested in Opendoor, for example. When Opendoor kind of came into Southern California, I was extremely interested. We partnered with them we were one of their preferred brokers for quite a while, almost a year, and was really impressed with their consumer experience. Now you might go on and look at their reviews and may see something different, but from an industry guy, and I saw how they were marketing their properties. Are you familiar with how they had the lockbox system, which was basically their own system?
Which Zillow's headed down that road as well. So
and I want to talk a little bit about consumer experience, but let's hold off on that for a minute. So I'm going to beat up on the industry guys, the realtors in the room. Let's be honest. We have consumers that are calling us. I'd like to see 123 Main Street, and maybe not everybody on our side of the phone is as responsive to get that consumer inside a house.
Yes.
So let me go back to my Opendoor experience. And their lockbox system was just, you pull up in front of a house without a realtor. Send a text, you get a code, you're in, bing, 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 bing. I'm like, oh my gosh. If I'm an agent, maybe I'm a little scared. Wait a minute, this person just pulled up to this house without a realtor. But if I was a buyer, we said, geez, I'm having a hard time getting a call from a realtor. This is kind of cool. Yeah. And then somewhere in the system, I got a text back from him and says, hey, you just saw 123 Main Street. Would you be interested in buying it? If so, click here. And that, of course, spun you off into what ultimately would turn into a contract. So this is my question, now that I've got the setup. Is Alex Perillo's kind of future cast of a consumer at some point, and by the way, I think he said this is, if it's not already happening, but it could be a real part of the market quickly. Do you see that? Is it happening, number one, and I just blinked and didn't see it? Or do you see that as a real possibility with
Yeah,
these?
it is absolutely a real possibility. And, is it happening right now, one click? No. There's a process that people have to go through.
Right. That's the value, right?
Well, in the lending side and the home search side, most definitely. So, You're looking at Zillow and Opendoor and
Others.
some of the other iBuyer programs that they're still not a dominant part of the marketplace. So there's that mixture. I spoke right after Errol Samuelson's from Zillow a couple of days ago, and his thought process was that Zillow doesn't ever see that getting to the point where not having to cooperate with other brokerages goes away for them. Therefore, they see an absolute need and desire for the MLS system to be in place and to continue on. But I think what Alex really is driving for is really the industry is at this fulcrum point that the consumer has some expectations and demands that I don't think has ever changed. There's just now players that are entering into the industry that are looking to deliver against those consumer expectations.
Right.
And that's the real fulcrum point. And the industry really they've got to get around this idea that, CAR has been doing these surveys forever of expectations of the consumer.
Right.
And, when they text you or when they reach out to you via, your website, their expectation is immediate satisfaction.
Right.
And these companies are taking a look at that and saying, we can provide immediate satisfaction.
I mean, we're all tired of using that as an example, but they want the Amazon experience.
Mm-hmm.
I'm here. This is what I want. I click. I'm moving forward. And I don't know that we do that as an industry very well.
No, but the capabilities are there because there are those industry entrants that have come lately that are showing, especially on the sell side, that's very, 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 very doable. And I just went through the home selling process and.
You sold your own house.
I sold my own house, and don't get mad at me, but I did. I went out and explored Opendoor. I explored Zillow,
why not?
and because I wanted to see what the experience would be like from that standpoint.
Right.
I will tell you that given the market dynamics that we have right now, I would have been crazy to sell to an iBuyer.
Right.
Just because.
How many offers did you have?
I only kept it open for a weekend, and I had 8 offers.
Right. Only 8.
Our past chair, I was just on a call with him prior to coming up here, and he had lost out on a listing in Pasadena that there were 70 offers on.
Yeah.
So it's
69 disappointed buyers.
Exactly.
69 disappointed agents.
And it's just difficult. This marketplace is very, very difficult.
Right.
Best experience I've ever had as a seller. Worst experience I've ever had as a buyer.
So you sold and bought.
Yep.
We didn't talk about this, so we can cut this out if you don't want to hear it. I also bought a house this past summer. So this is in the last 12 months during COVID. You were COVID.
January.
Yeah, okay, you just did it.
Yeah.
So great experience as a seller, horrible experience as a buyer. So was the buyer experience horrible just because of the competition out there, or was this transactionally you just found it to be?
Yeah. No, transactionally, nothing's really changed, and that's, CRMLS is trying to do some things to help brokers and agents to change that dynamic for people, but
Right.
It was really the home acquisition process was difficult.
Right.
Because you're almost having to shove your foot into every open door, and not the
No
company.
pun intended,
Yeah, no
right?
pun intended, and kind of just you're doing everything you possibly can.
Well, it's so interesting. We are talking about. I don't even think we've really got to this yet. What a crazy 2020 we had.
Oh, yeah.
I mean, whoa. I mean, I'll speak for myself. Panic attack in March. Where are we going? We're all in lockdown or stay-at-home orders. And very quick, at least for our industry, you talk about being blessed. I mean, I've been qualifying this for everybody I talk to because the real estate industry had a very, very good year all the way around. So when we are like, oh my gosh, what a great year, then I instantly, well, wait a minute, I have friends who owns restaurants and all of those. So needless to say, a difficult time for the country, difficult time for a lot of people. But if you were in our business, unbelievable year. If you were, again, you probably could fact check me on this, but if I'm within a few percentages, just give me a thumbs up. Use Brokermetrics. Brokermetrics pulls your data. Did like county median price increases, Riverside, LA, San. It seemed like pretty much everything was up somewhere between 17 and 22% year over year.
Yeah.
What? In a COVID year, we have no inventory. Everything. You bought a house. I bought a house. Mark Dowling bought a house. I mean, I didn't even ask the rest of our panelists. who would have thought that we would have been transacting real estate like that during that time?
During that time frame, yeah. And the industry deserves some kudos. The government put some requirements on them. Just the process of going through there are no open houses. There should be no open houses.
Right.
The whole entire process of getting into a property and signing a PED and that whole entire thing. The industry did very well
and adapted pretty darn quick.
It was impressive.
I can remember going through that first version of the PED and having a sales meeting, and everyone was saying, what? And it's within 2 weeks, probably even less than that. I mean, all right, we can do this. If the consumer wants to do it, we can do it. It is interesting, though, and we'll get off this, but so when I bought a house this past summer, my wife and I bought a house, it had been a while since I had actually been involved in a real estate transaction. And I was telling my agents, and everybody would listen, if you're in our industry, I think it should be required that you buy or sell a house every few years just for that experience. The good, the bad, the ugly, whatever it happened to be. So your sale was great. Your purchase maybe not so much.
I went to my executive team at Sierra MLS and I said, you guys may not want to hear this, but I'm going to require that every single one of you guys, we're going to pick one every year and you're going to sell your house, just so we have somebody that has that fresh experience of what our brokers and agents are going through.
I'm going to get this wrong, so give me a second. I interviewed Rick Hoffman yesterday, and again, Rick's going to be coming up here somewhere before or after Art. And he's with Sotheby's now. He's been, doing everything under the sun.
Yeah.
But down in the low desert luxury market, Sotheby's, of course. And he was quoting one of his partners about luxury is not about price. To the consumer, luxury is about the experience. And if I understood him correctly, it was like that consumer. It's not so much about the price and how beautiful it is and all the rest of that. Their expectation is the experience in the transaction, the way I took it, with the agent. The process needs to be that luxury experience. And I don't do a lot of luxury, if any, luxury stuff. But I got to tell you, how nice would it be if we could translate that experience to our customers so that they feel, they just bought a $400,000 house in the Inland Empire, but they felt like they bought a $4 million house at the beach and they were treated that way. We probably got some work to do on that.
Yeah, I think, as I said, this fulcrum point is that I think the industry really needs to get a better understanding of, what vacuum did Zillow fill? What vacuum has Open Door filled? And until we truly understand what vacuums they've filled and what vacuums still remain, we're going to be facing these people coming into the industry more and more as long as we create these vacuums.
Well, I'm going to go out on a limb. It's the same thing. I remember when I got into the business 34 years ago, and was a young realtor in Riverside with Walt McDonald, recently passed. And I can remember talking to Walt saying, "Geez, what are we going to do to raise the level of professionalism in this business?" And I don't remember what he said. I'm sure it was very, very wise. But we're kind of asking the same question now, and Zillow fills that vacuum, whether it's something as simple as returning a phone call or a text or whatever it happens to be. But anyway, so let's leave that aside. So real quick on inventory. In your career, have you ever seen inventory month supply of inventory as low as it is right now?
No, and I don't even think that figure's correct. It's
even lower.
Yeah, I think agents are leaving things on the market as long as they possibly can for additional exposure.
Right.
I know the property that I bought that it stayed on the market for an additional 5 days because of holidays, and they still adhered to the rules, but that's just the face of things that we're seeing.
And I know it varies by city, market, whatever, but generally speaking, less than 30 days of inventory on the market right now. Is that?
In some of our micro markets, you're talking about 10 days.
Yeah, nuts.
Yeah,
not healthy.
No, because and it just leads to a vast array of problems that the consumer really denigrates the consumer experience even further.
Right. Yeah. It's 70 offers, even 8 offers. I remember as a young realtor, as primarily a listing agent, and we took 6-month listing for a reason, because you didn't get 30 offers in a weekend, and sometimes it would be 4 months, and you get that first offer, and I can remember being told and coached and probably said a million times to consumers, hey, sometimes the first offer is the best offer. And it's been 3 months.
Yeah.
And boy, but it's been a while. It's been a while. It's just crazy. I got to tell you, if there's, you guys are going to hear from Chris and Bruce and a whole bunch of other people, and generally there's a lot of very positive economic news out there, and interest rates are low, even though they've ticked up a little bit.
Yeah.
The consumer demand, and which I do want to touch base with you on after we get off this inventory, the consumer demand is just insane, whether that's interest rate driven or working at home or the value of a home is more. I don't really know. I mean, we've checked the boxes. I'm still. No one has told me exactly why the demand has been so good as it has. Yes, interest rates are great. Yes, you should buy a house.
But interest rates have been great for an extended period of time. And
4% is a horrible rate. I mean, why would anybody want a 5%? Why would anybody buy a house?
What was it when you entered the industry?
Okay, well, my mom and dad were in the business, and they've all got those stories of 17, 18, 19%.
Yeah.
But I'll answer that. I got into the business in January 1, 1987, and worked for Gene Bird, New West Real Estate in Cerritos. He's still in business down there. And I'll never forget it. I don't know who the Fed chair was at that time or whatever. It didn't matter. But doing a sales meeting, and he came in and said something to the effect, interest rates are just dipped below 10%. Okay, so whatever it was, 9 7/8. And go out there and shout it from the rooftops because we're never going to see interest rates this low ever again. And I might be wrong, but I don't think they ever went above. I don't think they went back above 10. But back then, you got to remember, interest rates moved around daily.
Yeah.
I mean, you better lock, you were going to lock.
Yeah.
So around 10, it was 87. Maybe they went back up to 11 or 12, somewhere in between there. We could pull up a chart or a graph. But getting to that point, I don't remember when it was, Art, but when one of these crises, maybe it was 2008, 9, 10, 11, and I think CAR, NAR had an active campaign, confirm my memory if you can, that if we got interest rates at 5 or 5%, it would help the economy. It would instill confidence in the consumer. And so at the time, we must have been above 5. Maybe it was at 6. And we got there.
Yeah.
And then we got to 4.5, and then we got to 4, and sub 3 this year. And we're back up a little bit above 3. But anyway, it's just nuts. But let's put that aside. So the inventory, unhealthy levels, unhealthy. Again, this is a repeat. I have offices in Moreno Valley, Claremont, Redlands, and Covina. In all 4 of those cities, as of a week ago, 150 active listings.
Yeah.
In all 4 combined. That's a problem. Big problem.
Yeah, it leads to what I talked about a little bit earlier of 70 offers, 80 offers on a house.
Right.
It's unhealthy, and I still I understand some of the dynamics, but what's the turning point? How do we get to a point where inventory starts increasing enough to meet some of that demand?
So that's the question. Help us out.
I in all honesty, is it the foreclosure, the eviction issue? Is it it's been this way for a long period of time that it's very difficult to stick build anymore in the state of California.
We're certainly not building anything. That's for sure.
So there. That on top of it, that there's a negative migration out of California.
Correct.
And we're still facing, these issues.
Right.
I wish I had the crystal ball because I really don't. I talked about it. I don't understand the demand given that the economy is improving and it's getting better, but it's still the metrics aren't there to really cause what we're seeing.
Right. Okay, so good. So none of us understand. At least I'm with you. I've got more questions than answers. And one of the things that I've tried to do at these conferences, I learn just as much as the stuff I try to produce. And
I'm looking forward to listening to all these guys.
Yeah,
because,
well, I've been asking the question, and so far I haven't gotten an answer that answers what you just said. I still don't understand that. The demand is great. I don't get interest rates, but I don't know. It's quite an interesting market we're in. So Okay, so let's move away from the demand and where we are with the market and all the rest of that. So what's I don't want to put you on the spot because we even talked about this before. You don't want to project. So I'm trying to figure out again. Chris Thornburg's going to come up. I don't want to preempt him. He's basically very optimistic from an economic standpoint. So say 2021 is going to be a good year for real estate sales. He went as far out to say as 2022 is going to be a good year for real estate sales. He doesn't generally never goes past 1 year, but he basically went out almost 24 months and said things are going to be good. That feels, I guess, kind of right. Kind of feels like where we are right now. But as an industry, just from a pure profitability standpoint, okay, I got to sell houses.
Yeah.
Okay, if I can't sell houses, I got a little bit of problem. We have how many members? Did you say 105,000?
105,000.
105,000. So I've always thrown this number. I don't know if I'm right. I mean, if you don't have it at the tip of your fingers, so be it. But is it still about 50% of the agents out there that aren't selling a house?
Yeah, it's
in a year.
It just depends. We had those foreclosure years where that figure actually dipped below 40% because of the foreclosure situation. But it's in between the 45 to 50% range in any given year.
So we have too many agents. You can't answer that.
Yeah.
I own 4 real estate offices. My job is to recruit and retain agents. The reality is there's too many agents in the business. There just is. But it is what it is. I mean, it's
too many people
change.
chasing
a smaller pie.
Yeah, too much of a shrinkage of that pie causes even more problems.
Okay, a couple things. You fell into my trap. A minute ago, you mentioned evictions and you mentioned foreclosures, and in a little different context, we just mentioned foreclosures a second ago. A lot of talk in the news when we get to a certain date coming out of COVID, eviction moratoriums get lifted, forbearance comes to some sort of resolution. Do you have an opinion on whether we're going to see significant? I do, and we've had several speakers talk about this. Do you? Because I think the public is heard enough on the news that they're expecting something to happen with large-scale evictions and maybe large-scale foreclosures. Do you have any data behind the scenes that you might want to share? That
I really don't. I just, having seen the way that both state and national governments have treated this issue, I would hold a high level of skepticism that we're going to see this influx of a ton of evictions and a ton of foreclosures.
Okay.
I don't think it benefits anybody to have those situations occur. So.
Okay. Well, and without the benefit of listening to our other speakers, and you and I did not talk about this in advance, you are generally in agreement with the rest. I kind of have that foreclosure guy reputation, so I have agents. Matter of fact, there are agents that are watching this right now that are dead set disagree with what I'm saying. And like, oh, we're going to have large-scale foreclosures. I just see no data that reflects that. Okay, I just don't. And there's equity. There's just too many reasons why that just doesn't make any sense to me. However, you hear that. If you're flipping around the cable talking heads on occasion, you'll hear that. More so even on the eviction side, which I think is harder for people to gauge. It's easier for us to sit back as real estate guys and say, appreciation has been great. The loans have been legitimate. We don't have the same situation that we had in 2008, so we should not have a foreclosure crisis. That I think that's a no-brainer.
Yeah.
Tee it up, we can hit it out of the park. The eviction side, however, is a little fuzzier.
Yeah.
Because how do we really know who's paying their rent and where do those? I'm assuming there's a matrix out there or somebody's got data on that. But I use my data because we do a lot of property management in the Inland Empire. Our delinquency rate is lower than it was pre-COVID.
Huh.
Which, getting back to my panic attack, I had a panic attack last March. We did a 911 call with all of our landlords saying, we have no idea what's going to happen on April 1 rent. And my thought is we were not going to be receiving a whole lot of April 1 rents, April 1, 2020. Basically, everyone paid. Did the same conference call on May 2020, June 20. And we kind of said, oh, I guess we don't need to do the conference call in July, August, and September. Our delinquency rate is actually less, so I don't see wide-scale eviction issues. I know you guys on the rental stuff. do you have anything to say that might be of value on the rental side? We put all of our rentals into Sierra MLS. We have for years.
Yeah, I mean, it's still a focus and a subject that I care deeply about. I think that I don't have any statistics. Didn't come armed with any of that.
You asked me to prepare you, and I threw you a curveball.
Yeah, you did. But yeah, there's still, I can't tell you the inventory that we have in the system and how that tracks against what we saw previously. But yeah, I'm not sensing anything that I'm seeing. I'm obviously paying more attention to the residential side and the inventory crisis that we're facing at this point.
Well, I don't think a lot of people think, and maybe I'm wrong, but I don't think a lot of people think of Sierra MLS as necessarily the go-to platform for rentals. We've used the MLS to market our rental stuff for years, and we just have, but it is interesting. I mean, the price pressure on rentals, price pressure on values, the whole 9 yards, it's just nuts. Well, Art, I could go on for a very, very long time. I certainly thank you for coming.
Thank you.
We'll have you back next year for sure, assuming you're willing to have us. Maybe we'll do a live event. Who knows? But I think we'll be keeping an eye. I know the industry guys, all the realtors and broker owners on the call for certain. We do have a champion in you, and I'm not saying this as a thank you, but it is a thank you. I don't know if anybody else in the industry that does what you do as well as you do.
Well, thank you.
And absolutely. I mean, we have great people in our industry, Joel Singer, and you name a couple at CAR and at NAR, but we're very fortunate. I mean, which, by the way, let's maybe close it out this way. Is there a bigger MLS than Sierra MLS now?
No, we are
the big dog.
We are the largest. I like to say in the universe.
Absolutely.
Most people don't recognize, if I can,
Sure.
Kind of the value of the multiple listing service. It is an anomaly that exists in Canada and the United States and almost nowhere else in the world.
Right.
Fortunately, through my travels, I get exposed to people from countries all over the world. And my biggest concern when it comes to the multiple listing service isn't the ability to provide product and service. It isn't the ability to, bring, exciting new things to our brokerage community. It's more of how you guys relate with each other. This idea of cooperation, especially in a hot market, it's been eroding.
Yeah.
And my concern is that people don't understand what the value of the multiple listing services.
I completely agree.
And how special it is. How special it is.
Right.
If you guys, if you had an opportunity to talk to somebody from Peru or from Mexico or from, Australia or anywhere,
to that point though,
Japan.
So the United States and Canada, you're going to correct me right now. They're the only countries that truly have a functional multiple listing service.
A wide-scale functional multiple listing service.
Which is funny because I think most of us in the business here sitting in Southern California just think this is how it's done everywhere.
Yeah, and it's not.
Right.
And it's not.
Okay, we're going to turn this into a Howard Stern interview. You listen to Howard Stern?
Yes, I have.
What I mean by Howard Stern interview, Howard Stern ends the interview, you think he's about done, and then the interview goes on for another 45 minutes. Okay, so we're going to go on for a minute more of them because I was about ready to say we're finished. So you thought you were off the hook. I'm going to bring you back. So am I hearing you right? You may be a little concerned about the future of how we transact real estate or offer compensation. Well, let me put it this way. We talked a minute ago about inventory, and I think if I heard you right, you said there may be even less inventory on the market because homes are staying on the market maybe a few days longer before they're actually going pending. Is that what you're saying?
Yeah, there's probably a few less homes on the market because it is such a hot market that a lot of brokers and agents are not putting it on the multiple listing service.
I'm going to disagree with that because I think it's the opposite and it's a problem. And I think it's probably a violation. As a matter of fact, I'm sure it's a violation because there's a violation for everything. We've always had pocket listing problems, right?
Yeah.
And we've had coming soon problems and all the rest of that. Inventory being so tight. Let's just make common sense with this. I've got a listing. It's coming up. I know I can, and again, this is not a new problem. This has been around forever. Let's just put it in the pocket, which we discourage, and it's a violation, right? Depending upon how you're doing it. It just seems like this market is ripe for that.
No, that's exactly what I was saying, is that we're probably seeing an influx or lack of influx into the MLS because people are doing that.
Right. But at what point, to steal your inflection point, it's bad for business. It's bad for the MLS. It's bad for the industry. It ultimately ends up eroding the value of what we have, this very special thing that we have.
So there's an MLS back east that is getting ready to publish a study. And we've done it within the CRMLS system, and it is a hard study to get your arms around.
Right.
What could the seller expect when they sell their house by using the MLS?
Right.
And what could they expect if they don't use the MLS? And those numbers, it's 15 to 17% in some of these micro markets of a differential in between what you get on the MLS and what you would get outside of the MLS.
Right.
And the industry doesn't need another lawsuit. We don't need somebody coming after brokers and agents saying, you enticed me to sell off the multiple listing service, and in doing so,
market.
off
Right.
market, well, pocket listing,
Right.
and in doing so, you forced a lower purchase price
Right.
on me.
Well, it's an embarrassment. I mean, it wasn't that long ago, and I don't know if you're a forms expert, but the listing agreement now has an entire page, right? That wasn't there before.
Yeah.
An entire page on the listing agreement, which basically goes to what you just said.
The clear cooperation policy,
Right.
exactly.
Well, and the value of going to the MLS and what it means if you're not on the MLS. And I remember, I guess as an industry, we needed it. We needed to, kind of police ourselves, and we put an entire page in there that said that. But to me, that was an embarrassment. It was an embarrassment that we had to do that, because it should just go without saying.
Yeah.
Of course, it's better to put it into the system, let the syndication process work. At the end of the day, I've thrown this number out. I'm sure I've been wrong, but I think I'm right. I list Adam's house. I put it into CRMLS. I push the button, and pretty damn quickly, if not instantaneously, with the syndication process, how many eyeballs have access? It's the world, basically, isn't it?
Yeah.
The world,
Yeah.
right? So I'm going to sit down and I'm going to tell my seller that there's no need to show your property to the world. Let me sell it. Let me sell it this weekend.
Telling the seller in Pasadena that I mentioned that you're going to forego 80 offers on your property and probably net an additional $200,000 to $300,000 on your high-end property,
Right.
Because I think I can. Yeah, that just
It's right.
It just doesn't fly.
But it's unfortunate, and I think it's at the crux of part of our problem within the industry, whether it's a level of professionalism or just bad actors or whatever it happens to be. Okay, we could go on.
Yeah, but this, the market will at some point come around, and buyers will be the currency, and sellers will be, it'll be the 3 months and we haven't gotten an offer situation.
It's the left turn.
Yep.
Rick Hoffman, his thing is the left turn is market's going to change.
Yeah.
And for him, that left turn is a different market. We don't have the buyer demand. Maybe it's interest rate driven. Maybe, not a lot of talk in bubbles. We've been doing these interviews over the last 3 days, getting ready for March 24th. And, I think a year ago, quite honestly, there was a lot of talk about, we're in a bubble, we're in a bubble, we're in a bubble. Well, okay, well, I don't know if we were in a bubble, but man, if we are, that bubble got bigger because,
I have no idea what we're in.
Of course not.
We're in an unprecedented market. That's what we're in.
There you go. It's an unprecedented market. But anyhow, all right, my friend. Thank you
sir.
again for however many years we've been doing this. Again, Art Carter, CRMLS. We're very fortunate to have you.
Well, thank you
in
for
our industry, and
thank you for inviting me.
Yeah, always.
I appreciate it.
You got it. The COVID bump.
COVID bump.
You got it. All right. Thanks,
Thank
Art.
you.